So this does not mean I'm going to teach the entire strategy in full. This means I'm just going to lay a small foundation that is enough for you to be able to trade at your level. Now, rectangle theory, what is it about? Rectangle theory is focusing on a particular range in the market. So you see that there is a range that has formed in the market, and that's the only part you're willing to focus on. And there are three aspects to this rectangle that you need to know. Okay, so here we go. Three aspects. Four conditions, or four main conditions, and 5 steps to remember. Okay, with the rectangle, okay, just give it a second. Hold on, guys. Shogun, give me the name of that individual, please. Just message me privately that name. All right, so 3 aspects of the rectangle, 4 main conditions that are tradable, and then there's 5 steps to remember. If you're able to get all these things, then you are on your way to trading the range. So let's look at these 3 aspects before we continue. All right, so let me find the rectangle. So the rectangle, we're looking at aspect number 1, aspect number 2, aspect number 3, and we're going to break these down. Every rectangle should have a floor or support, and it should have a resistance, and it should have a middle zone that will allow you to make the decisions from that point. So the top of the rectangle is your rectangular resistance. The bottom of the rectangle is your support. So we already have 2 of those aspects. But the main aspect you need to be able to look at is what happens in the middle. And with your naked eye, you won't be able to pinpoint the middle. So what you would need to do is get a trend line and form a cross in the middle of the rectangle. And when you're able to get that, the middle of where the 2 trend lines intersect, or where they meet, that is where you find your middle point. And we call that either the reversal line or the pivot. So however you want to remember it, is up to you. Okay, so we have the 3 aspects. 1 is support, 2 is resistance, 3 is the pivot line. Drop a Y or a yes if you are with me. Let's see. All right, so let's go from the 3 aspects to the 4 main conditions so we understand how to trade this well. Let me remove all of this. Now, here is aspect number 1. Now, when we're talking about this arrow that I'm drawing, we're referring to the arrow as price. And these are the 4 main things that you want to be able to look for when you're trading in a range. If price starts from the resistance and it makes its way to the pivot line, and it's unable to break that pivot line, okay, what happens is that price is likely to go back to the resistance. That is aspect number one. Number one is if price starts from resistance, it goes towards the pivot line, it's unable to successfully break that pivot line, then what is likely going to happen is that price is going to reverse back and go back to resistance. Drop a 111 if you get that point. Starting from the top at resistance, going to the reversal line, unable to break that reversal line, it will then reverse back to the resistance area. That is why we call it the reversal line. The pivot is where the main things happen. Condition number two is that if price starts from support and it goes towards the reversal line and is unable to break the reversal line, guess what it's going to do? Who can have a guess? Starts from support, is unable to break the reversal or pivot line. What do you think is likely to happen? It will pull back, so it will go back to where it came from. So what are we saying here? If there's ever a point of rejection, price is going to head to the place where it was rejected from. So aspect number two is support, pivot line, and then rejected back to the support area. So that's condition number two, sorry. Drop a 222 if you understand that. Condition one is resistance, reversal, back to resistance. Condition number two is support, reversal line, support. 222 if you understand point number two. Excellent. Let's look at condition number three. This time it starts at resistance and you see that price has now broken the reversal line. And if price normally breaks a particular piece of structure, what is likely to happen? Who remembers? Start with R. Good. So when price is able to break a particular piece of structure, it is likely to retest and then continue its journey down. So condition number three is if price starts from resistance, it breaks the reversal line, it retests the reversal line, then it's looking to head down to support. And this is the skeletal framework of the rectangle theory. It gets more complex in its own course. So that's number three. What do you think number four is? Starting from support, breaking the pivot area, retesting that pivot area, going to resistance. These are the main four conditions. It doesn't mean they're the only four. In the rectangle course, it goes a lot deeper than that. Okay, so that's number four. Type in a 333 and a 444 if you understand those ones. Now, the beautiful thing about the rectangular theory is that all the decisions you're looking to make should be at this area. Actually, no, let me ask. Sorry, let me backtrack a bit. Which place should you make your decisions when it comes to trading the rectangle? Aspect number one, resistance. Aspect number two, pivot. Aspect number three, support. Which place should you be making your decisions when it comes to trading? Which place should you make your decisions? I'm going to let you know now, when it comes to trading the rectangle, for now, as beginners, all of your decision making should come from the pivot. And I'm going to tell you why. The reason why is because the pivot will give you enough information to know where price has come from and will give you the confidence to know where price is going to. Let's write that one down. The pivot gives you confidence or gives you assurance, or whatever word you want to put. The pivot shows you where price is coming from and will give confidence to show where price may go to. I'll always use this phrase from your beginning stage all the way to when you graduate this academy, and that is the market always speaks. And that means that the market will give you information and then you act on the information given so that you can make an informed decision. You cannot act if you don't know. And the thing is, most people act on what they think they know, but the market has already spoken about what they are doing and where it is going and how it is going to get there. We explained that in yesterday's lesson. So all your decisions that you're trying to make are normally from the pivot or the reversal line. And that means that the Tuesday to Wednesday transition in range trading is going to be very, very important to you. Because what we're saying is that if the market is pushing down on a Tuesday, and we're saying that Wednesday is reversal day, then what we're saying is that we're looking to see if there's going to be a push down on a Tuesday and then a push up on a Wednesday. That's for condition number one. Or a push up on Tuesday and then going down to a push down on Wednesday. That's condition number two. What about this one? Is where you have a massive push and you see a push up on Tuesday and then a push down going on Wednesday. Or vice versa, you see a massive push happening and then it comes back down on the Tuesday, coming back up on the Wednesday. So the Tuesday becomes the point of reference to the reversal line. And the reversal line should act as a magnet, just like engulfing candles. Price should either be going towards or pulling away from that pivot area. Drop a Y or a yes if you're with me on this. Excellent, 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 excellent. Great. So always make sure at this current level now that you are trading at, that you don't add or take away from what has been taught here. What we're looking to do now is that we're going to be building on this so it opens doors and other rooms to other things that is only in the rectangle course. Stick to what is being taught for this particular level and it's going to help you a lot. So now let's talk about the steps to remember in drawing your rectangle. So back to this. We've covered the three aspects, which is support, resistance, pivot. The four main conditions, we just covered that. Now the 5 steps to remember in order to draw the correct rectangle. Okay, so now let's go to that. Let me just use this as an example. So now, when it comes to doing the correct rectangle, we have to understand what structure it is in. So when we're doing the rectangle, what structure are we in? Are we in a trend or a range? Are we in a trend or a range? Drop it in the chat box. Are we in a trend or a range when it comes to rectangle? We are range trading. So that means we have to go to the rules of range trading, and that is focusing on 2 particular points, a low point of the market and a high point of the market. And so when it comes to drawing a range, you are looking for the lowest point and the highest point. A range in this, especially when it comes to the rectangle, is the distance between the lowest point of the market and the highest point of the market. That is a range. Drop a Y or a yes if you understand that. Okay, so finding a range, and most importantly, finding the most recent range that took place is what's going to help you with this rectangle. So find a range. We have been able to identify that this is the lowest point and then this is the highest point. And you see that there is nothing higher than the high, there's nothing lower than the low. And watch how I drew that range, starting from the lowest point, going to the highest point. That is how I found my range. The same way I did that is the same way I draw my rectangle. Step number 2. First step was find a range, not find the range. Find a range. A range means that there can be multiple ranges taking place. Finding the range means that there's only one to look for. With range trading, you can find as many different ranges. But when we're trading the trend, there can only be one trend happening at a time. Okay, so find a range. The next step is draw the rectangle. It's the same way I drew that blue arrow. It's the same way I will draw my rectangle. Bang. Okay, so that is step number 2. Number 3 is adding your conditions. Resistance, resistance. Number 4 is getting your trend lines to find your pivot. And then adding the horizontal line at the end to mark that pivot. That is how you draw the rectangle. Find a range. 2, draw the rectangle. 3, find your support and resistance. 4, get your trend lines to mark the intersection inside your rectangle. 5, finish off by marking your pivot at the end. Quite simple. Drop a Y or yes if you're with me on that. We'll go to the main chart in a second to see the power of the rectangle. I just want to see if everyone understands this. Okay. So just to show you how powerful the rectangle can be, you're looking at particular points in the market. So let's say, for example, because hindsight is a funny thing, let's say we're going to look at the most recent range that has formed. So let's look at this one over here. Okay, let's say, for example, we're looking at a new week and we're saying we want to make an informed decision, but we're waiting to see if this range breaks the pivot. So what do we do over here? Let's talk this through. So the first thing is we were able to find a range, okay? Lowest point to the highest point. That's the most recent range that took place, okay? This one was last week's, the last range that completed, but now you're seeing a new range that has also completed, so you can focus on that one. Let's go on. Next one is draw your rectangle. This one is quite small, but this is the power of range trading. Step number 3, support, resistance, then find your pivot. And then get the middle part going. Rectangle is so easy to draw, so quick to draw. And like I said, ranges are very, very subjective. I found the most recent range that completed, and this showed me a completed range, okay? If this one had, if price had reached the top like this, If it went all the way up to here, I would still refer to this range as the range I'm drawing for my rectangle, okay? But I'm looking at a range that looks like it's about to reverse. Now, I need to make an informed decision, and that informed decision is going to be happening at this pivot area. It can either do this, going to the reversal point and then coming back up, or it will break that pivot area and make its way all the way down. Now, either way, we're still making a decision from that reversal line. Now, what happens if or when the range is broken? We discussed this in the range section, that if a support is broken, it then becomes a resistance. If a resistance is broken, it then becomes a support. So we need to have in mind that there is a possibility that this support could be broken and a resistance is made. But if a resistance is made, a range needs to be completed by having 2 points of reference that price needs to bounce to and from. So you can't just have a resistance without having a support. And the rectangle makes it easy for you to be able to get an automatic new support and resistance without even trying. And this is what you do. You can copy the distance of the rectangle, or copy the rectangle itself. Remember the trick I taught? Hold on Control and use your mouse to select your items, and then you just drag. It has now made a new rectangle like so. So now you have a new support line, which is now turned into resistance, and then you have a new pivot that has taken place as well. You can copy this to now have your new support. So I've been able to now do intervals with my rectangle. And the beautiful thing is that if you go back in time, you're going to find that this interval that you had drawn in the present was a particular reference point in the past. It's a lesson for another time. So let's get into this. We have decisions that we need to make, and that is we want price to break our reversal line. That is where we make our decisions. So let's see if that happens. All right, so look at what we have here. We have a break of that particular structure. Now, your trading personality will demand either you do an instant execution or you do a sell stop or a sell limit, okay? Sell limit would have been, if I could have gone back one candle. So we know that candle is going to be like a massive candle. So what we could say is I'm going to put a sell stop meaning that my entry price is below the current price. And it means that you're looking to continue selling down, but you're now anticipating if it does ABC, then I'm willing to go DEF, okay? So that is one condition. Or you could say that you're not sure if you're willing to do a sell stop. So what you want to do is, if price is able to reach down here, you would then do a sell limit, which would mean that entry price is above current price. Or, or you could say that you're not really sure if you want to do pending orders at all. So your third option could be, if it gets here, market execution. Type in a 111 if you're cool with that. So now you have options with your strategy. You decide whether you want to be able to take the step. Do you want to let the trade run and hope that it breaks your reversal line beforehand? Sell stop. If you want assurance and let it break your reversal line, anticipating a retest, sell limit. If you just want it to wait till it gets to that pivot area, market execution. And guess what? They all have their pros and cons. Because if you have a sell stop, it might reverse and go against you. If you have a sell limit, it might reverse and get to that area, but price might not be picked up. You might miss your entry by 1 or 2 pips. If you do market execution, it could reverse against you anyway. So there's no best pending order. But there are options that you may have depending on the type of trader you are. So let's look and see what had happened. Either way, all traders would have been correct in this example. Bang. You saw that there was a break. You saw that there was a retest of the market. Those who selected sell stop would have won. Those who would have selected sell limit would have won. Those who would have selected market execution would have won. It just depends on your personality. Now you see that price is at the support. What would you do as a trader if price breaks that support? You can do the exact same thing you did above. Select this, select this, select this, bring it down, because now you are working in intervals. Oh, that didn't work out well. But what I was trying to do is copy all of that. Okay, let me try and copy it again. Number 2, copy. Number 3, copy. Bring it down. And then here, here, and this one here. Okay, so you can do the same thing going down, because what this range trading has done, it has now set intervals for you. You can wait for a break and a retest, or you can wait for the next decision-making line, which is the pivot that is below that next rectangle. Let's see what it's done further down. Does it continue or does it reverse back up? So you can see an engulfing candle has formed over here. Boom, it's now at the next reversal area. Does it go back to where it came from, or does it come back down? Now see, this is why it's very important to understand that you make decisions at reversal lines, not at support or resistance. Because if you had decided that you are going to maybe sell or buy, this could have gone anyway. This is hindsight now, so we have to now track it like it's happening in real time. However, you now see the second time it's been able to push through, you see a break, a definitive break of that reversal area. And that is where you could have done your sell limit over here. You could have done your market execution, or you could have done your sell stop. Reversal lines, pivot lines are the most important part or the important aspect of your trading, because it will help you make informed decisions. Okay, you see an engulfing candle over here. It would have helped you make a decision. And sometimes they don't always go to those areas. I'm going to teach you something about the rectangle just now. For example, why didn't it go all the way down? Why did it only stop here? I'm going to show you something right now. Remember the trick I taught you yesterday about, or the previous lesson about how if you make that same projection in a trend and you don't want to go all the way, you can cut that projection in half and you can make your way to that halfway projection. The rectangle has the same philosophy behind it. I'm going to teach you that right now. Every rectangle has what they call a major reversal line, or a major pivot line, and a minor pivot line. The major one is where you're going from the support and you're running your trend line all the way down to the resistance, or the resistance going down to support, and then your support going up to the resistance. But then there are minor trend lines that you can make that can form minor pivot or reversal areas. And that's what happened here. And how do you form those minor pivot areas? Instead of going from support or resistance, what you're going to do is you're going to go from the pivot. You're going to start from the pivot and then go down to support. Start from support, go up to the pivot. Go from pivot to resistance. Go from pivot to resistance, or resistance to pivot. And now you're seeing that there are smaller areas that you can make as targets that have shown reversals in places where you wouldn't ordinarily see a reversal. These are called minor pivots. And this inspiration has been derived from Metatron, the angel of geometry, known as Enoch, according to a lot of Jewish mysticism, and according to Old Testament Christianity, and that is a man named Enoch was taken to heaven after walking 365 years with God. But then his story changes depend on who's telling the narrative. Some say that he's going to appear as one of the two witnesses preaching in the end days, and he will be shot and killed and all that stuff. Others say that he was transfigured into an angel, and the angel's name was Metatron, and he was the angel of geometry. Why Enoch was so important is because he was believed to have seen fallen angels in the flesh, and he was able to see their nature and how they moved, and the women that fallen angels slept with, and giving birth to Nephilim and all that stuff. So back in those times, they didn't use traditional mathematics. They used these shapes to be able to paint a picture. And so I took a page out of that and said that if shapes and numbers work in all these different elements of life, it should be able to work in Forex as well. And that's why I've been able to be so successful with the rectangle theory. Okay, so we have major reversal lines, which has been illustrated at the top, and then we have minor reversal lines that have been illustrated at the bottom. Drop a Y or a yes if you're cool with that. So when you say that, hey, I like this rectangle thing, I want to know more, you will get to know what the trend lines actually represent, because they're not just trend lines, they help you with something. You will get to know how to trade ranges going into a trend. You will get to know when the trend is going to end. You get to follow all these different patterns and formulas that the range trading can be able to tell you. So if you're comfortable with range trading, then you're a rectangle trader. I encourage you to go and get the course after you are making your money in beginners. Are we cool? Drop a Y or a yes. Let me see your Ys and yeses again. Let me ask a question. What criteria must be met for you to take a trade from the top of the rectangle? We're not covering that here. That's in the rectangle course. Everything at this level is from where? Somebody help me. And please change your name so I know who I am addressing. Otherwise, the admins will not be happy and they will remove you. As a beginner, where are we trading from, guys? Where is the point that we trade from? Is it support, the top, the bottom, or the middle? You see, retail traders have this thing of when they're taught something, they want to experiment with something else. Don't do that. Go with someone that has given you a blueprint of how to trade this thing. There are so many testimonies out there in this academy that will shock you about a person that traded from $300 and made $33,000 in 2 weeks with this rectangle. Okay, there's a person that started their account from $7 or $11, and now they are making almost five figures, pretty much. They're known as a pharmacy rectangle trader. Those in Ghana know who this person is. Okay, they're in the Ashanti region, and they were able to build up a pharmacy from $7 trading the rectangle. And they will tell you all day, all night that they will trade nothing else. To the point where we said that if they trade anything else, there's something wrong. They might be unwell. So with this, don't entertain top or bottom. You are trading the pivot at all times. If you want to know more, then graduate to the rectangle course, and then go into mastery where we trade all of those other things. Are we cool with that? Don't do the curse of the retail trader, and that is, I get that, but I want to trade this way. I want to go from the top or the bottom. Don't do it. Just follow the simplicity of this. Forex is meant to be simple. It's designed to be simple, but there's something in our mind that likes complexity. They think that the more complex something is, the better it is. No, it's the more simple something is. That is why all throughout this, I haven't introduced one single indicator. And many of you coming in that are newbies are waiting to see oscillators, waiting to see RSI and all that stuff. I don't entertain that until we get to university. And even that's even minimal. It's really in the honors program. That's where I teach about indicators and all that stuff. So that is range trading. Are we good with that?